All right, you guys, in this video, I'm going to show you another prop firm account that I'm currently doing things with. And I just did one of those 100K accounts. And I'm in two trades right now. You see, I'm using a standard lot of one. Okay. And this is a 100K account. All right. Now, the reason why I'm using just a one is because if I hover over my risk percentage, using one lot size, I'm only averaging about 350 bucks potential loss per trade. Okay. So that's the reason why I'm only using one lot size. Okay. So basically, if I had a 200K account, I'll be using two standards. 300K account, three standards. And you say, well, man, why are you using such a small amount? Well, here's the reason why. And I told you guys this many times before in the past. When you are dealing with prop firms, you're looking at the 300K, the 200K, and the 100K, but that's not the concern. The concern you need to be looking at is what is your daily drawdown limit, which is only 5% of that account. So the truth is you're only working with 5% of whatever you purchased or try to, whatever prop firm account you're trying to pass. You're only realistically on a daily basis, you really only got 5% of that account. Okay, don't ever forget that, because if you ever go above that 5% in drawdown, guess what happens? They end up giving you a notice saying, oh, you failed the challenge, not because you weren't in a good trade, but because you over leveraged and went into drawdown too deep. So this account I just started this week, and you can see I'm already up $1,000 on it already. And this is just a slow climb. So what happens is that what we're going to have to do, retailers, we're going to have to slow down the process. We're trying to pass these prop firms way too fast. And so we're over leveraging. We get too confident on the trade and all these different things. The emotions kick in, blah, 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 blah. You know the routine. So as a result of that, you're trying to pass the prop firm challenge. They know that retail traders are notorious for over leveraging. That is the number, in my opinion, that is the number one problem with all retail traders. And that is the number one rule that you never break when you're on Wall Street or when you're in institutional traders in their circle. That is their number one rule that you do not break. They can deal with losses, they can deal with this and that, but the one thing they cannot deal with is people who over leverage. And that is the number one thing. Now, for an example, okay, just imagine that, you are at work at your job. Just follow this concept. You're at your job, and when there's a manager there who's on the floor watching everybody, people tend to perform and stay on task. But when the manager gets called out and have a day off because they're sick, what typically happens with the people? Their production numbers go down. They are chatty more on the floors. They're not doing their job. They're not focused. Why? Because there's nobody overseeing them to tell them what they should be doing and to make sure that it is enforced. And so when you're working for banks and institutions, there are rules and regulations because you're managing people's money and they ain't playing that. So therefore, it is a hard, set, fast rule. You do not trade above 1% to 2% risk. And so that's their number one thing, money preservation, okay? Account preservation. You don't do that. But when you're trading on your own account, it's like the manager is off the floor. Nobody's watching you. You're free to do what you want. And that is where the problem is. You could be the worst trader on the planet, and you could still lose 10 trades in a row and still at 1% to 2% risk. Or let's just say I have on this account, I think I got a $5,000 balance daily limit. Okay. So if with a 5,000 daily limit, watch this. If I do 5,000, hold on, I'm sorry, my mouse is acting up. 5,000. I want y'all to see this, okay? So this will make sense to you as to what the problem is. 5,000 divided by 350 bucks on average, which is what my loss is on this one, okay? And let's see what happens. All right, that means I can lose 14 trades in a row before this account will be blown, okay? 14.285. But just round it up to 14 trades in a row is what it's going to take for me to actually blow this account. Do you see what I'm saying? Okay. So that means I got to be one of the worst traders on the planet in order for me to blow this account quickly with 14 trades. So I'm sure that you are watching this and you say, okay, I don't lose that many trades in a row. That's exactly the point. You can be a blind mice just clicking buy and sell a couple of times. And some of those times you're going to be right. Some of those times you're going to be wrong. But the point is, you still wouldn't end up blowing the account in a week. Why? Because it was not about how many trades you won or lost. It was about your risk management. Okay. So with some of you guys on a 100K account, you're doing 10 lot sizes. And so you can quickly understand, okay, if I'm doing one lot on this one and it's worth $350 loss, times that by 10, that means that you're risking $3,500 of your $5,000 daily limit, which means you lose only 1 to 2 trades, you're already blown that account. You're done. And this trades is live. You can see it running. Okay, look at the bottom. You can see down here, these are running. So I just started this account this week. I'm up $1,000. Okay, I'm up $1,000 or so, or $1,100, and it's just slow. I'm just taking my time. $350 risk per trade. Therefore, if the trade don't work out, I'm only losing $350. It's not that big of a deal. I got plenty left over to keep on trading. And the more I keep building my portfolio down here, the more I can relax, because it's giving me that cushion up against the daily limit. Okay? Don't ever enter a prop firm challenge without looking at the daily limit. That is your actual balance. They show you got $100,000, but the truth is your daily limit is all you got. Okay? I hope this is making sense to you guys. The daily limit is all you really have in case trades go wrong. When the trades are going right, everything is pretty. But if the trades go wrong, you better look at that daily limit. And oftentimes it would be smart. I'm just telling you, if you're going to continue to over leverage, no matter what I say, here's the smart thing to do. If you see that trade ain't working in your favor, you better cut that trade off and say, okay, I'm just going to live to trade another day. Because if you let that trade hit your stop, and you close to that daily limit, you out. And with some of these prop firms, they actually have a trailing stop on it. So yeah, you had a good day 2 days ago, this and that, and you thinking, okay, well, you know what? I done made 10 grand on it. Right. But what they did was they moved that daily limit around to match your new balance. Okay. So it ain't like you got an additional 10,000 to play with. I hope you're getting this. Because I'm telling you, in the retail space, the number one reason why we are not doing well is simply because of over leveraging. So I hope this video was helpful. I just want to show you guys this, and I'll see you in the next video. All right? I'm trying to turn this thing off, but my mouse is still acting up. All right, peace and hair.